South Africa. Rates of investments or rates of return are low for investors in the sector, and then there are the incumbent risks of farming. You invest in a commodity that might not have sufficient yield, markets might not exist, there could be a flood, and the entire thing is decimated. So it's not a very attractive sector for people to move into, and yet we're constantly saying it's Africa's competitive advantage, but the investors don't seem to see it that way.
Thank you for having me. I think, first of all, it's not quite true that the returns are always low. It depends on how you structure the project and which segments are you targeting. Niche products, things like tomato paste, lauric oils, etc., can provide very good returns, 30% real returns and higher. So the potential definitely is there. Once you start looking at the crop sector, normal dryland crops, then it becomes a very lonely segment. At the same time, you'd have much lower returns in something like South Africa versus Zambia, where your yield per hectare is just simply much higher. So it depends on which segment of the agro industry you're looking at, and the yields will be dictated.
And what
from
about
there.
the risks that are perceived to exist within agriculture?
Certainly there's always the weather risk, there's always the climate instability risk, but those can be reasonably managed. If you're looking at the more intensive crops, that mitigates a lot of the risk as well. Some of your biggest challenges in Africa are your logistics and your cost controls. Agriculture lives or dies by the way you can control your costs.
All right. Now, often in Africa, we're seeing agriculture operate in very much a dual component. There's the commercial agricultural element, and then there's the subsistence agricultural element. And commercial agriculture, which drives exports, happens on a very limited basis. The labor pool is within the subsistence pool, and experts are saying that's the problem.
I think you have to draw a very clear line between your subsistence farming and your social objectives of agriculture. There's no place for them in the pure commercial component. That's not to say that there shouldn't be corporate social responsibility programs and the like, but to truly be competitive, and we are in a global village, you have to look at large-scale commercial farming. It's the only way to make your agriculture competitive. Otherwise, you'll always be facing import products that are cheaper than yours.
Let's talk about the financing of agriculture, because those who want to enter the sector say this is the biggest challenge. The banks are very scared to lend because the initial investment has to be the investment on the land itself that you're acquiring, and we know that land tenure and property rights have become very, very controversial issues in Africa.
Can I just segment that question into two answers? Firstly, in terms of making an attractive investment, you have to look at a longer value chain integration. So you cannot look at the crop alone. You have to look at the whole cycle up to a reasonably finished product. That changes your return profile significantly. Secondly, even on the crop side, the real risk comes when you're looking at dryland farming, and that's the most difficult sector to invest in. But the moment you bring in irrigation as a component, maybe some multi or intercropping, it changes the investment profile significantly. Again, this is on large commercial scale farming. For the traditional outgrow or subsistence farmer, you will always have that risk profile, but that is a more social objective.
But you need to answer the question that I've asked here, Louis, which is the banks are not often prepared to incur the risks that go with farming, be it dry land farming or any other one. And this takes us to the issue of land ownership in Africa. What's your view?
Okay, in terms of land ownership, that I don't see as a particular impediment. We need to divorce the land ownership from the crop and the economic activity on the land. Models that work generally have the community as a renter or leaser of the land, and they extract economic benefit from that, and possibly some profit sharing on the commercial activity. But the commercial activity goes for the large scale. Just adding on to what you were asking about the banks and them viewing it as risk, there is actually a lot of funding available, and there is quite a bit of agricultural appetite. The bigger challenge is getting bankable projects. There's not enough bankable projects that are coming through in the pipeline, and that's where the blockage is.
All right, let's talk about the interface that's needed between the farmer and the market, because that also adds to whether or not an investor wants to invest in it. We saw in 2007 a boom in prices for agro goods. 41% apparently is what the prices rose by, and that was largely blamed on speculation on the futures market. And it then introduced the whole element that the African farmer may produce whatever product at cost. But what it's sold for is determined by a whole variety of networks internationally, and international auctions and international grain boards, etc., before it even gets to the retailer. What does the African farmer need to do to really and truly get past all of that in order to see value for money in terms of their investment and their output and what it's cost them to produce?
Therein lies the biggest challenge. Your problem is that farming to a large scale is like any other commodity business, farming or anything like, mining or anything like that, in that it's about low cost production. And it doesn't matter, besides any other hedging strategy, future markets, logistics, all those things, unless the African farmer can produce from crop to market at a lower cost than an overseas provider can, and the problem is there's subsidy challenges and things like that as well. But unless he can produce that cost cycle cheaper, he's never going to be in a competitive position.
And what about those who don't really want to invest in the farming activity per se, but are interested in agriculture? I know the JSE's introduced things like agricultural derivatives. Do they work?
They provide some comfort. It's more treasury management function than anything else. You can't infinitely hedge yourself at a good price. You'll still have to fall in line with the market at some time, so it provides some short to medium term comfort. But as far as farming, it is always linked both to the processing and the supply, and you can never de-link the two unless you're into short-term speculative trading.
Okay, so just working off your optimistic statements earlier on, there is potential in Africa. Which would be the investment hotspots? Some people have said Malawi, Zambia.
I'd certainly go for both up the east and west coast of Africa if you're more on the oil side or higher rainfall sides. Nigeria is a very interesting market. It's highly undersupplied, both in terms of grains and proteins. Zambia is providing interesting, purely because of the efforts that AFGRI is putting in there, and they assisting to bring in the infrastructure. But again, it's vertical integration that's needed there. You need to bring in the silos and the mills and things like that to really make it cost effective.
All right.